Greetings. Welcome to CEC-UGC lectures. In the ongoing series of bank reconciliation statement, in our previous lecture we already talked about the procedure of preparing bank reconciliation statement. In our previous lecture we already talked about the favorable balance or we can say the debit balance as per the cash book or credit balance as per the passbook. So how to prepare the bank reconciliation statement if any of these two balances are given in the question. Now in this lecture we are going to talk about if unfavorable balance, or you can say overdraft balances, or you can say negative balances, that is credit balance as per the cash book or debit balance as per the passbook is given in the question. So in this lecture we are going to cover these two cases, that is case 3, that is credit balance as per cash book, or case 4, debit balance as per passbook is given, and we have to prepare a bank reconciliation statement with any of these two balances. So the case 3 is credit balance as per cash book. So this is the negative balance, or you can say this is the overdraft balance. Overdraft means whenever we withdraw more amount, more than whatever is deposited in our account, then that is the case of overdraft. So if it is given in the question that credit balance as per cash book, you have to keep this thing in mind that it is a negative balance. So balance of cash book, and if you have to reach at balance of passbook, which is also a overdraft balance, so in this case there are some rules which you have to follow, which I have already explained you in my previous lecture, that if you are beginning the bank reconciliation statement with the balance of cash book and you have to reach the balance of passbook, so do what bank has done. You have to do according to the bank. If they have added some item, you have to add that item. If they have deducted some item, you have to deduct that item. So here is the bank reconciliation statement. This is the format. If we are preparing bank reconciliation statement, we are starting the bank reconciliation statement with the credit balance as per cash book. Remember, credit balance as per cash book means this is a overdraft balance, or you can say negative balance. So what you are supposed to do, you have to do what bank has done, because since we have to reach to the balance as per passbook, so wherever we have to reach, we have to do accordingly. We have to reach the balance as per passbook, do whatever has been done in the passbook. We have to reach as per the balance of cash book, do whatever has been done in the cash book. These are the thumb rules which you have to follow in all the 4 cases. But since these are the negative means the credit balance as per the cash book is a negative balance. So here are some more things which I am going to tell you in this case. So the credit balance of the cash book, it will you will arrive at the debit balance of the passbook. So let's understand this with the help of example. So here in this question, overdraft balance as per the cash book is given on 31st March 2019, and this is 1,80,000. Overdraft balance as per the bank statement, that is known as a passbook, is given on 31st March 2019 is 2,13,900. So to begin with the bank reconciliation statement, we have to begin with any of these balance. So we are beginning the bank reconciliation statement with the overdraft balance as per the cash book. So overdraft balance as per the cash book or credit balance as per the cash book means negative balance or unfavorable balance. So this is given in the question 1,80,000. So the first entry which is here is check received and recorded in the cash book but not sent to the bank. We have received some check from our debtor, but this is recorded in the cash book. We have recorded this transaction on the receipt side, that is on the debit side of the cash book, but this is not sent to the bank. So there is no entry in the bank account. Bank has not credited our account. In this case, what you are supposed to do, whether we have to add this transaction or deduct this transaction. In this case, see, we have to reach at the balance or as per passbook. So what you are supposed to do what bank has done. Bank has not increased your account. In this case, bank has not received this check, so they have not increased our account. So if they have not increased our account, but it is this transaction is recorded in the cash book on the debit side of the cash book, in this case what you are supposed to do, if bank has not done an entry, in this case we have to reduce the balance of the cash book as well. It means this item will be deducted. But why it is shown in the column of this add? Why we have added this item? Since you have to keep this thing in mind, since we are preparing bank reconciliation statement with the negative balance, either what you can do all these items whatever you have done added there in the case 1, you can do the same thing here, or whatever items you have deducted in the case 2, you can do the same thing. But one thing which you have to do in this is you have to put negative in front of the overdraft balance as per the cash book. If you are not doing that, in that case all those items which were added in the case 1, that is if debit balance as per the cash book is given, all those items will be deducted here, and all those items which were deducted in the case 1 will be added here. So you have to do reverse. I am repeating it again, that the first transaction which is check received. So if any check is received, the balance of the cash book is gone up, but it is not recorded by our bank, so they have not increased our balance. In this case what I have suggested you, the rule was what bank has done, you have to do that. Bank has not increased our account, in this case we have to reduce our balance, that is cash book balance. In this case this transaction will be deducted in a normal case, but since we are starting this bank reconciliation statement with the balance as per cash book, that is credit balance, negative balance, so all those items which were added will be deducted here, and all those items which were deducted in case 1 will be added here. You just have to do reverse. The second item is credit side of the bank column casted short. The credit side of the bank column, credit side of the bank column of the cash book. So we have recorded one item, and the payment side of the cash book is casted short 1000. Since bank has not recorded the balance of the passbook is over with the rupees 1000, whereas the balance of the cash book is short. In this case this item will be deducted in a normal case, but we are starting this bank reconciliation statement with the balance as per cash book, negative balance. So in this case we'll do just reverse. Whatever items were deducted there will be added here, and whatever items were added there will be deducted here. The next item is check received written by the bank. If there is any check which is received and it is written by the bank, so you have to do whatever bank has done. Bank has not recorded this transaction. If bank has not recorded this transaction, in the normal case we would have deducted this item, but this is a negative case. Negative case means we are beginning this BRS with the overdraft balance. So in this case we have to do reverse. Bill discounted dishonor means this item is not recorded by a bank, so we have to do whatever our bank has done. This is the thumb rule which you have to follow while preparing the bank reconciliation statement. So since bank has not recorded this transaction, we would have done it, deducted this item, but again this is a negative case, we are adding this item. Or else what you can do in a very simpler manner, or you can just to avoid the confusion, you just put the negative sign on the 1,80,000. If it is a negative balance, just put the negative balance, and whatever the items you were adding, add them. Whatever items you were adding, deduct them as per the case 1 only. So that would be a simpler manner for you. The items which will be deducted here is check deposited into bank for collection, but no entry was passed in the cash book. So this check was deposited into bank, but no entry was passed in the cash book. We have not recorded this transaction, but bank has done. So bank has increased our account. So what we have to do what bank has done. So we have to increase this amount. So basically this 3,000 was to be added, but again it is a negative case. We have started this BRS with the negative balance, so you have to do reverse. Bank charges entered twice in the cash book. We have recorded these bank charges twice on the payment side, but it was not recorded in the passbook or in the bank statement. So do what bank has done. So bank has not recorded. So this was supposed to be added, but since it is a negative balance, we are preparing BRS with a negative balance, we have to deduct this. In the similar manner, all these items will be deducted, and the final answer will be equivalent to overdraft balance as per the passbook. This is also a negative balance. Look, in this question we have started with the overdraft balance as per the cash book, that is a negative balance, and we have arrived at overdraft balance as per the passbook. Overdraft balance as per the passbook means negative balance. So there are 4 possible cases. That is, the first case was debit balance as per the cash book, that is favorable balance. Credit balance as per the passbook, again it is a favorable balance. Unfavorable balance or overdraft balance means credit balance as per cash book. The last case is case 4 is debit balance as per passbook. So if you have to prepare bank reconciliation statement with the debit balance as per the passbook, so you have to follow the same rule, that is do what has been done in the cash book. So if you are starting the bank reconciliation statement with the debit balance as per passbook, which is also a negative balance, so if you are doing it, the rules remain same. From where you have to begin? You have begin, that is balance of passbook. Where you have to reach, that is balance of cash book. So you have to see the target. We have to reach at cash book, balance of cash book. So the rule says do whatever customer has done or whatever has been done in the cash book. The rule remains same as in the case 2, but it is a negative balance, overdraft balance. So in this case, all the items which were added will be deducted, and all those items which were deducted will be added here. Let's understand this with the help of example. From the following particulars, prepare bank reconciliation statement on 31st March 2019, and the balance as per passbook is given, and this is overdraft. This is 80,000. This is debit balance as per the passbook. Debit balance as per the passbook means negative balance. So we'll begin the question, that is bank reconciliation statement as per the passbook, and this is negative balance. Either what you can do in a very simpler manner, just put the negative sign or put this 80,000 in a bracket, that will depict it is a negative item. And whatever you were doing in case 2, that is the items you were adding, add them, and the items you were deducting, deduct them in the same manner as you were doing in the case 2. So here the first item which is added here is check issued but not yet presented for payment. Why it is added here? You have to see from where we have begun. We have started preparing the bank reconciliation statement with the balance as per overdraft balance as per passbook. Where we have to reach? We have to reach the balance as per cash book. So we are targeting cash book. So we are targeting cash book. So do what has been done in the cash book. If we have recorded that transaction in the cash book, we have added that transaction in the cash book, add that. If we have deducted that transaction in the cash book, deduct that in a very simpler manner. So the first item which is given here, check issued but not yet presented for payment. We have issued some check, we have recorded this check on the payment side. So this entry was recorded in the cash book but not by the passbook, or it was not recorded by our bank. So what we are supposed to do? Where we are heading? We are heading for the balance as per cash book. So what we are supposed to do what has been done in the cash book. So in cash book, this item is deducted. It is shown on the payment side. If it is shown on the payment side, that means it is deducted. But what we have to do now? We have to do reverse. Reason being, we are starting this bank reconciliation statement with a negative balance. So whatever we were doing, we were adding the transaction or we were deducting the transaction, we have to do reverse, because we have started this bank reconciliation statement with a negative balance. So check issued but not presented for payment is to be added here, and the items like interest charged by the bank but not recorded in the cash book. Interest which is charged by the bank, it is recorded in the passbook, but it is not recorded in the cash book. What you are supposed to do? Do what has been done in the cash book. So cash book has not recorded this transaction, but the passbook has recorded this transaction. So we have to increase the balance of the passbook. We have to increase the passbook. In this case, we have to add this item. But why we are deducting this item? Because this is case 4, and this case 4 is when we are preparing bank reconciliation statement as per debit balance of the passbook, that is negative balance. So you have to do reverse. Check sent for collection but not yet collected by bank. Again, same thing you have to do. This item were added in case 2, but since it is a negative one, we are beginning this bank reconciliation statement with the negative balance, so we have to do reverse. Insurance premium paid by bank, fees paid by the bank but not recorded in the cash book, collection charges charged by the bank, discount bill dishonor but not recorded in the cash book. So the answer will arrive at the balance as per the cash book, that is credit balance. Now finally, all the 4 cases are over, that is favorable balance is given in the question or unfavorable balance is given in the question. Now there might be possible, before preparing bank reconciliation statement, it might be possible that you have to prepare the amended cash book. What is amended cash book? Amended cash book in which you have to do certain adjustment before the preparation of bank reconciliation statement. So the steps which are to be followed for the adjusted cash book are, first of all, you have a cash book will be prepared with the bank column only, and it will be started by writing down the balance of the cash book which is generally given in the question. The second point which you have to keep in mind is all those errors which are committed in the cash book, all the errors or omission which are committed in the cash book will be rectified. So usually these errors are whether there is a overcasting or undercasting of the debit or credit side of the cash book, or we have issued a check to a creditor but we forgot to record this check in the cash book, check deposited into the bank but omitted to be recorded in the cash book. Basically all those items will be recorded in the adjusted cash book which are omitted, or if there is any error in recording that transaction only in the cash book. So if any omission or any error has been done in the cash book, that has to be adjusted, that has to be recorded in the cash book. If any item or any error or omission is done by bank, in that case that will not be recorded in the cash book, that will be recorded in bank reconciliation statement. So the third point is here which says certain amounts for which bank has given credit in the passbook will be recorded on the debit side of the cash book. Such items are interest allowed by bank. If bank has recorded some items but we forgot to record those items, because it happens that there is an entry of interest, or if there is any amount which is directly deposited by the customer, or any interest and dividend is given. So in all these cases, these are the transactions which are done by the bank, but we forget to record all these transactions in the cash book. So all these items will be recorded in the amended cash book. And there are certain items for which bank has debited our account, like interest charge or debit made by the bank for the bank charges and commission, direct payment made by bank on our behalf for the insurance premium, check sent for the collection but dishonored by the bank. So all these items will be recorded in the amended cash book. Then finally this cash book will be balanced, and the new balance of the cash book is taken as a starting point for preparing bank reconciliation statement. We will prepare the bank reconciliation statement with this balance, new balance. The points which you have to keep in mind while preparing amended cash book or adjusted cash book, these are the items which will not be recorded in the amended cash book. The first is check deposited into bank but not yet credited by bank. This is the error which is done by bank. So basically what I have told you, all those errors and omission which is done in the cash book will be recorded in the cash book only. The items or errors or omission which are done by bank will not be recorded in the amended cash book. They will be recorded in the bank reconciliation statement. So the first item which is here is check deposited into bank but not yet credited by bank. This is the item which we have recorded in our cash book. So there is no error in the cash book. The error has been done by the bank. They have not recorded this transaction. So all the items which, all the errors or omissions which are done by our bank will be recorded in the bank reconciliation statement. The next item is check issued but not presented for payment in bank. We have issued a check and we have recorded this transaction in our cash book, but this is not recorded by our bank. So this will be recorded where? In the BRS. Any wrong entry in the passbook. If any error is done in the passbook, then in this case this will be recorded in the BRS, not in the cash book. So let's understand this with the help of example, how to prepare the amended cash book. So in this case, see, in the question it was given the opening balance of cash and this was the debit balance. If the debit balance of the cash book is given, that is a positive balance, and this will be shown on the receipt side. We have already discussed about how to prepare the cash book in our previous lectures. So you have to prepare this cash book in the similar manner. So the balance of the cash book was given 20,000 in the question. So you have to post it on the debit side. The next item is 2BR, that is bills receivable, proceeds of a bill. We forgot to record these items. If there is any error or any omission in the cash book, then that has to be recorded in the cash book only. So there was a bills receivable which we forgot to record. So if we forgot to record, this will be recorded on the receipt side with rupees 15,000. On the payment side, as you can see by drawings, life insurance premium. So this is life insurance premium and this was not recorded by us. If it is not recorded, this is the payment and it was not recorded by us, that is in the cash book. This will be recorded. Any bank charges, this was recorded in the passbook but not recorded in the cash book. So I have already told you the thumb rule to prepare adjusted cash book is all those errors or all those omissions will be recorded here, which was not all those errors or omissions which are done by us or which are not recorded in the cash book. If any error is done on the part of our bank, will not be recorded in adjusted cash book. That would be recorded in the bank reconciliation statement. So after preparing this adjusted cash book, the balance is, opening balance comes to 28,850. This opening balance is coming on the debit side. So this depicts debit balance as per cash book. After preparing adjusted cash book, we can prepare the bank reconciliation statement. So here we are preparing bank reconciliation statement as per the adjusted cash book. This is the new balance, that is 28,850. Now the items which were given in the question is check issued but not presented for payment. Why we have not recorded this item in the adjusted cash book? Since this item was already recorded in the cash book, but there was a mistake at the part of bank. So all those mistakes, errors, omissions which are done at the part of bank will be recorded only and only in the bank reconciliation statement. And the rule to follow to prepare the bank reconciliation statement is do whatever bank has done, as we are targeting the balance as per passbook. So bank has not recorded, bank has recorded this transaction. So in this case we have to add back the other item, that is check sent for collection but not credited. The difference is 12,000. We have to deduct this item. Cash collection entered in the cash book in the bank column but banked on 2nd January 2019. This was given 25,000. The total amount is 37,000. And finally we arrive at balance as per passbook, that is 27,850. So students, this was all about how to prepare the bank reconciliation statement with the 4 cases, that is favorable balance is given when unfavorable balance, that is negative balance, is given, or how to prepare the amended cash book. Thank you so much. Keep watching.